Hello everyone. Today we want to look at the candlesticks charts. Previously we had learned the three types of charts. That was the line chart, the bar charts, and today we are going to look at the candlesticks charts. And bit of a recap is what was candlesticks, or what is the characteristics of the candlesticks. And we were saying the candlestick shows as the opening and the closing price of commodity or currency that you are dealing with, and it also shows us the high and the low price action reached before it closed. So candlesticks and bar charts show similar information. So the only difference is how this information presented to us in the chart. When we look at the bar charts, we find it is a little bit complex to really interpret the charts because they look as just symbol lines. But when we look at the candlesticks, we can see that we have a very clear information of the charts. And with this kind of information, we can see that the charts shows us a very prettier and simpler informations. With this kind of knowledge, we can be able to determine, or we can make our conclusion that we will be using candlesticks from henceforth to do our chartings and analysis. And with these candlesticks, it can be able to show us the highs and the lows, low range. Also, it shows us the opening and the closing price, and that I want to now take into serious consideration what we are talking about. So we have this open price and we have this closing price. So the first activity that took place here, first activity was the market opened, and it opened at this price. Let's say this price is something like this. Take an example. We were dealing with the USD JPY, and we can say it was at 110. So it opened at 110, and the price dropped down to, let's say, 109. After the price had came to 109, the price shoot up to this high. So let's assume this our high is 120, and the price came down and closed here at, let's say, 118. So what actually took place here in the first place? The first thing that we know occurred was there was an opening price for the commodity that we were dealing with or whatever at that particular time period. So if it was at 1 hour, it was at that particular 1 hour time. Now, after this price had opened here, it might have gone to this high, come down to this low. So it might have built to us this high, then it came to build to us this low, then the price went again up and closed here. Or we might have another scenario that this price opened here, moved to this low, then moved to that high, and it came down and closed here. But one thing that we have to know is that the first activity that occurs was the price opened, and the last activity that we have to know is that the price closed at a particular zone. So within the open and the close, the activity between the high and the low is now called the range. This is now the range of whatever has occurred during the whole trading activity. So for this candle, we can see the price opened here and it moved up. The price opened there and it moved up, or it moved upward. So with that kind of an upward movement, what can we conclude about this candle? This candle was moving from this low going to the high, meaning this candle is an uptrend candle, or it is an upward candle, and the upward candle is now what we're calling it a bullish candle. You see? Now, between the open and the close, we can see now we want to have a very clear information, and that is why this whole between the open and the close, what we have been learning or whatever we have been, the terminologies we have been dealing with. Now we want to experience them in our charts. And then the market analysis, there are 3 types of analysis. And the first type that we have to know is the fundamental analysis. Then we have the technical analysis and the sentimental analysis. As you can see from my drawing here, technical analysis seems to have carried the day, and we have now fundamentals and sentimental analysis like supporting this technical analysis. So this market moves by the influence of news, by the influence of what other people are doing, and by the influence of what the charts have been doing for the period of time. So we are going to look at the fundamental analysis. And when we look at the fundamental analysis, fundamental analysis is a way of looking at the markets through economics. So we look at the markets through economics. We also look at the markets through social, and also we look at the markets through political factors that occurred affecting that currency. The bigger share here is economical news, because the economics is what drives the market, but also we will take into consideration the social activities that might affect the people either positively or negatively, and these also will have an impact on the currency. Even political factors also, they have an impact on a currency pair. So with these economic and social and political factors, they can affect the supply and the demand of whatever commodity you'll be trading. And when we talk about the supply and the demand, is the volume of the buys and the sales that are going to take place in that market. So with this fundamental analysis, the trader now, that is you, will be analyzing the news, the political factors, and their effects on the currency pairs. So without further ado, we want to look at the sources of this news. Where does this news come from? So in this type of news, we have sources like the Fed speeches. You can hear like the Powell speaking, that is about the dollar. You can hear about a lot of activities going on, about the speeches from the general bank managers. We also have the non-farm payroll, some NFP. NFP is a very, very crucial fundamental news that have a very, very high impact on the currency. We also have other types that are like the FOMC. So I can just add here, we have like FOMC news. We have the CPI, Consumer Price Index. We have even the gross domestic productions. There are lots. We have these news are focusing on the economy. Like for instance, the non-farm payroll, that is the NFP. The NFP deals with the US dollar. So I can just give you a very short note about the NFP, and this NFP is called the non-farm payroll. Non-farm payroll. And this type of data, it tries to give the actual figure of how many people were employed to work in the farms. And when we talk about these farms, the farms that are excluded are the real farming, are excluded from this non-farm payroll. So we are looking at the private farms, we are looking at the companies, how many people have they employed for that month. So we are looking at the number of employment. So we will call employment change. Also, We'll be looking at the other factors like the average earning per hour, average earnings in an hour. We'll be looking also, when we talk about the NFP, we'll be looking at the taxations on these people. We'll be looking at the wages. Was there an increase of wage? We'll be looking at those factors. So when we talk about the NFP, it mainly affects the US dollar. So the currency that is affected here about the NFP is the US dollar. So you have to note. So the pair that will be affected is the US dollar. Yes. Now, since we have known now about the NFP, we ask ourselves, when is this NFP released? An NFP is released every Friday of the new month. So it is very, very key to know every Friday of new month. Now, with that information in hand, every Friday of the new month, what is the time? So these news will be released when the US banks are open. They are released almost like 15 minutes before the new US bank open. So why do we have to focus on this one? This one will be carrying a lot of information. How many people are employed? What is the unemployment change? What is the employment rate? Those factors. So if the unemployment rate goes from, let's say 3%, it goes to 6%, it will mean many people are not employed. And what will that mean to the dollar? It will mean that the dollar will be weakening, because we know there is less supply of income, or there is less income to the majority of the people. You see? And now with that information, you will know what is going to happen to the dollar. If the number of people, there was a change in unemployment rate, it will mean the dollar will be weakened. But if we have good news, we have 1% unemployment, it will mean majority of the people in the US are employed. If there's an increase in income, let's say people are earning $20 an hour, and now there's an increase in earning by $5 or $2. What is that going to have on the US dollar economy? If the average earning will increase, it will mean there will be more supply of money. And when there will be more supply of money, what will be happening to the dollar? The dollar, there will be a lot of money in the hands of the people. Meaning also this will trigger inflation to go up. And when the inflation will go up, it will be affecting the dollar in the long term. You see? So those kind of informations are able to help you to make the judgment of how it's going to impact the dollar. But now remember, when these news are released, they even don't last for like 10 minutes. The market will respond almost immediately when these news are released. And you'll never expect to go and wait to see these news on TV. Somebody now reading the whole statement. No, it's just a release. You see? And when that release is just done, it affects the pair, either positive or negative. So the rules for trading these news, if you want to trade these news, or if you want to be safe, is don't enter your trades after the news has occurred. If you don't know what you are doing, enter the trade after the news has already occurred. Another thing that you should know is that if you are on profits and the news is about to be released, you can either adjust your stop loss, put your stop loss to where you are satisfied with, or you can just close that trade. Why? This is because the news that is going to be released may have a negative impact or a positive impact on the pair. And when that happens, it may either push the pair to go up or to go down. Also, another thing that you have to know is that you can use a stop loss to avoid a lot of losses if these news occur. So we ask ourselves, where are we going to see this news? Are we going to find this news on Google, or where are we going to find this news? So there are websites that give us this information about this news. And the first website that we know is the forexfactory.com, and also there is myfxbook.com. So we are going to look at these sites right now. So we are going to start with the forexfactory.com. So we are going to start with the forexfactory.com, and I'm going to share my screen. Forexfactory.com. Just a minute. So this is that website. As you can see, it is written forexfactory.com. So this is the news that are going to occur for this week. So as you can see on these websites, we have the first site here is the Forex Factory. Then here we have the home pattern if you want to go and learn several things. This platform has very many things. There's these forums where you can now interact with other traders, learn what they think and things like that. There's also trades. You can see which our pairs are moving, whatever analysis. Then there is news. Then there is the calendar. So for us to, these news are things that have occurred. So we don't want to go there. We want to see what is on our calendar, what is on the economical calendar, because these news have already been set dates when they will be released. These news are what is the time they are going to be released. So these news have time when they are going to be released for everything. So as you can see, this is the news for this week. That is from December 19th to December 25th. And the news starts from Sunday and it runs all the way to Saturday. Now, that aside, we can see, so this is the dates and we have the time here. So this time here is my local time right now, and my local time is 9:52. But if you are now in different places, let's say if you are on a country that is not GMT plus 3, let's say your country is GMT plus 2, you can just come and they click GMT plus 2, or you can click GMT plus 11. So it depends. If you are on the US, you can just look for the country, let's say New York or anything like that. You can just look at it and select the time zone that you want. And whenever you have just done selecting the time zone, you just save your setting. So your time will be converted. You can see now your synchronized time is now 9:52. Desynchronized time can be found at the top of the page to the icon. So now we have seen how we can change our time zone. Another thing we have here, the currency pair. Those news being released, which pair is it going to affect? Or those news are from which country? So like this one, NCD, these news are from the New Zealand. And these news are affecting the which pair? The New Zealand dollar. So here we have now the impact of these news. There are news that are less impact. There are news that are high impact. There are news that are moderate impact. And there are news that are non-economical. They don't have any impact at all. So for me, I always filter the news that are high, medium impact and high impact. The other ones, I don't want them to feel a lot of my information to my screen. So there is this filter pattern here on the right side of my screen here. On the top right side, there is icon written filter. So when I click that icon filter, you can see expected impact. So now with the red one, these are news that are high impact expected. When we talk about the high impact expected, is that the news are going to affect the pair either positively or negatively. Then you have the medium impact. So the medium impact are news that are going to be released, but their impact on that pair will not be very, very much. You see? Then there is this low impact news. Low impact news may have a very, very small impact on the pair or even no impact at all. And then now we have this non-economical news. And when we talk about the non-economical news, like celebrations, holidays, the Christmas, they might not have very, very big impact on the pair. You see? So that's on the types of expected impact that I want to see. Also here you can say, I don't want to see news about the Audi. I don't want the Audi news. I don't want the CNY news. I don't want the Euro news. I don't want the... You can just select those kind of news. Let's say you select it like that. Then there's the type of news that you want to see. Be it from growth. How is the growth of that nation? There is a release of that one. How is the inflation rate? There is the news for inflation. How is the employment change? There is the news for that one. How is the central bank doing this? There is the news for that one. The bonds. So you can select whatever type of news you want to see here. You see? And now you come and clear here and click apply filter. So when you have clicked apply filter, whatever you have selected will now be shown here. So, like for instance, this that was on Sunday. Let's look at the one that are on Monday. NZD, New Zealand dollar. We had the impact, low impact, and the news was about what? Trade balance. So, if you want to go in detail, you can just come and click this box here and see whatever was happening there. So here we have now this first line here, this first column written actual is how was the news, what was in the news. If the trade balance was negative or positive, you come and look at it here. Actual, it was negative 864 million NZD. Now, what was their forecast? They were looking to have more. But now, so if it means the forecast was like that, but the actual is this, it means it is favorable for the economy. You see, the debt is reducing compared to the forecast. Now look, previously, what was the debt at that time? It was 1,302 million. So you see, the debt was high, but now here it is balancing, it is reducing. So it is now meaning it is favorable in that economy. And you can look at a lot of information if you want to come and look at the charts or whatever has been happening with that news, and just look at it here. If it was good, bad, like that. You can see it is still on the negative side. This was when it was positive, this when it is on negative side. Now, we will not see this much impact right now. So what we want to do is we want to go back to the previous weeks, the beginning of, we can look at the beginning of November, and we go to the chart so that we can see how it was affecting that pair. So we are going to go to the first week of November. So this is the news that we had on the first week of November. And on Friday, because the NFB was released on Friday, when we are on Friday, we can see there is what? This is now the NFP. And the NFP is Friday, 3:30 p.m. Kenyan time. During that time, we have the average hourly earning for the US, and we can see they were looking at the positive increase of 0.4% earning. So we can see on farm change, employment change, how many people were employed. The previously we know it was previously there were 312k, but then we had an increase in the number of people employed. What did that mean? It means the dollar is now going to be strong. Then unemployment rate. The unemployment rate previously was 4.6, and now we can see this dropping to 4. It was 4.8 and it is dropping to 4.6, meaning many people were employed. We had a percentage of almost 2% change. So with this now information here, it can affect the dollar positively. So the dollar will go up. Now let's go to the chart and we look at the November 5th. Let's go to the chart and let's look at the November 5th. We are going to open our chart here, trading view. So So we are opening our chart on TradingView. Okay, this is our chart here. So I'm going to show you this screen here. So you are going to go straight to November 5th. November 5th. Yeah. So this was the first week of November. This is November 5th. And what were we expecting to see? So the news was released at 3:30 p.m. So we can see it is 15:00. And during that time, that 15:00, you can see clearly the news was released. But let's look, what was the impact? There was no very much impact. But as much as we start, the market was consolidating here. But when the news was released, the market went down to this place and it started now going up. So you can see, let's measure the number of the change in pips. You can see here there's almost 281 pips change because of the NFP news that was released. You can see the market shoot up to that place. Now let's go also. We want to look at what happened on 10th November. If there was news that pushed this price to go up. So we are going to go together to 10th November. 10th November. So that means the next week. So we click next. I want to see what happened on the next week. November. So you can see on 10th November, what did we hear? Now look, so this Wednesday 10th November, the news was released at 4:30 p.m. What was the news about? It was the consumer price index, core CPI also, consumer price index, and the unemployment claims. So now let's go and look at how these news affected the dollar. Remember, we had almost the whole day with news for the dollar. Now let's go and look at the dollar during that 4:30. So I'm going to share the screen also with you together. So now let's come here, 10th. That is now on 10th. On 10th, the news was released at 4:30 or 16:30. And look, I can just put 16:30 here. That is 18. And my time is one hour ahead. I have forgotten. So 1 hour ahead will mean this place. So it's here. When the news was released, what happened to the price? The price shoot up from this place to that high. So meaning the news was favorable for the dollar. And how many pips did we have that affect that pair move? It moved 423 pips to the upside. So you can see these news have they affect the pair in a very different perspective. So now let's look at the beginning of December. Let's look at the beginning of December. Beginning of December. So here is it. We have the news on Friday. Non-farm employment change, average hourly earning, unemployment rate. Let's look. The news were negative for the dollar and positive here. So now let's go back to let's go to our chart again. We want to look at the first week of December. So first week of December, that is 4th December here. Now we can see the news was not having a very high impact. Let's go to see that news exact date and time. So the news was on December 3rd. The news was on December 3rd, not 4th. It was on December 3rd. And now I think I had gotten the information wrong. So the news was on December 3rd here. And the news was released at 4, which it will be mean it is 16, so I have to adjust my time. So the news was released. Let's look at the time the news was released. The news was released at 4:30 p.m. Kenyan time, meaning on my chat it will be 15, because I know my chat, my broadcast time is 1 hour ahead of me. So the news was released 15 here, 15:30. So around this place here. So when the news was released, the market chopped first of all, went up, went down, went up, went down. Then after those, a lot of manipulation, the market moved up to that high, almost 190 pips. So you can see every time we are having the news, the market will always be either moving up or down faster. You see? Yes. I hope you have learned something about the news. So that was it for the Forex Factory. You can also look at the MyFX book. You can look at the MyFX book news, and you can be able to understand better. So you want to look at the sentimental analysis, and when we talk about the sentimental analysis, this is where traders analyze what other traders are doing. So you want to see where are other traders at? Are other traders selling or are other traders buying? This is very risky one, because it is not good to move as a crowd. So it is very risky. But some people want to understand that. So when we talk about the sentiment analysis, we want to see on Euro USD, how many people are buying? What percentage, majority of the buyers, what percentage are there? Let's say the buyers are 60%. We come, how many percentage are the sellers? The sellers are 40%. Now, here, you are just analyzing what other traders are doing. So if you can see the majority of the people are 60%, and the majority and few of them are sell 40%. Now you come and say to yourself, now if many people are selling, the market may do the manipulation, I will sell. Or you can say, if all the people are buying, I will buy. So you'll see, you'll just be like not very consistent, because you'll just be following what the crowd are doing. But now we will love to see at site where people, these analyses are there. So on the site that is types of sentimental analysis is on the site called you can just write Forex. It is called Forex Sentiment. Forex Sentiment. So I just write Forex Sentiments. Forex Sentiment. So when I click on the Forex Sentiment, it will lead me to something called Daily FX. And this Daily FX is powered by the RG Client Sentiment. So with this client sentiment, you can see here how many people are on Euro USD. So on Euro USD, we can see there is average. So it just come and give us the percentage average. How many people are selling? How many people are buying? We can see net long at 71% and net short at 29%. Meaning the market may go in favor for the shorts, because the market will not be willing to lose any money. So the market may go against the buyers, and it goes for the shorts. So that is why here you can see the symbol they are giving you to go bearish. But that one may not work. So you can see like for USD JPY, many people are selling and many people are, and few are buying. And you can see now they are giving me the signal to go opposite what people are doing. So with this, you don't really rely on a lot of technical analysis. You just go and look at what other people are doing. But I want to promise you, this one is not good for long-term trading. Yes. So that is it. So for this sentimental analysis, you can look at those types and the RG. You just read RG client sentiments. Yes, that link here. You can just write it, just paste it anywhere, and you will find that the information about the sentiment analysis. So I'm going to go next. So after that one, we want to look at the technical analysis, and we are just going to touch a bit of it, and then we will be done. So our technical analysis is the study of the behavior of the market and the patterns the market is trying to show us. We can use various tools and indicators to do this analysis. And on the technical analysis, there are very many types of analysis that we can deploy. That is number one, support and resistance. We have another type, that is the trading channels, the trend lines. We also have another type, that is the Fibonacci levels. We also have other types of analysis, that is another trend. We can analyze the trend of the market. We can also analyze the oscillations of the market. How is the market oscillating? So we will learn about those tomorrow, or today if I get another time to do the recording. And I want to say thank you so much for joining me this day. Kindly remember to subscribe to this page so that you can get more information. You can learn a lot with us. Thank you so much.